Are you ready to learn about how you can use SBA financing to acquire businesses in the trades? What's up, blue collar business owners? Welcome back to the Blue Collar Prosperity Podcast. I'm your host, Paul Maska, where we focus on helping guide you to have a prosperous blue collar business. Today, we have with us Dillon Caraway. Dillon is a loan officer on the service contractor lending team at Live Oak Bank. He joined the team in 2020 and helps contractors in home services across the country to grow and transition their business through financing. He received his bachelor's degree in finance from UNC Wilmington. He enjoys playing golf. He's really good at golf. And he enjoys going to the beach as well in his free time. Side note to that, first time I met Dillon in person, we played golf, and I think he shot like 32 on the back nine or something ridiculous. Drove the green on 18, but then he three-putted for par. So that is Dillon Caraway. Welcome, Dillon. Thank you so much for being here. What is going on today?
Paul, appreciate it, man. And I was just trying to keep up with you out there. I saw you have a few swings on the range and knew I was in for a long day. But appreciate it, man. Thanks for having me on. Really excited to talk about everything mentioned, from growing your business, transitioning your business. How can you utilize financing to do that? Who is Live Oak Bank, and how do we fit into the industry? So, really glad to be on today.
Awesome. Yeah, super excited. This is obviously a very hot topic for the last couple of years of growing through acquisition, or even entrepreneurship through acquisition, of people who don't want to go, work their corporate job for the next 40 years. They want to, take their knowledge and go acquire a business using SBA financing. So it's definitely a hot topic. Definitely get a lot out of it. So give our listeners, just a little bit of insight into Live Oak Bank and, how your journey there started and you got to where you are today.
Awesome. So Live Oak Bank, we're headquartered in Wilmington, North Carolina. A lot of listeners probably have never heard of us, but we've actually been the number one SBA lender, which stands for Small Business Administration, lender in the country since 2017 through their 7A program. And we have a unique model at the bank, probably different than every other bank in the country. So if you think of your traditional bank, most banks focus on a particular region in the country and every industry. We took the exact opposite approach, where we have our headquarters here in Wilmington, where about 800 folks work out of, and we have about 200 folks remote. But we don't have any branches throughout the U.S. We have our headquarters here and then like one or two satellite offices. But we decided to focus industry over region. So bank was founded in '08. We were making expansion loans to veterinarians. So we would help a vet owner go from one practice to two practice to three practices. And we got really good at doing that by utilizing the SBA lending program. And over the years, we started to grow and evolve and look at different industries that the SBA backs their government guaranteed lending program. And 2019 was our official launch date for what we call our service contractor vertical. And that primarily started as HVAC, plumbing, and electrical, with the bulk of that being HVAC and plumbing. We've done a few standalone electrical businesses, but primarily HVAC and plumbing. And now we're starting to see, some different types of businesses, which is really cool. We've looked at some residential service repair roofing companies. We've looked at some garage door installation companies. So it's kind of cool to see that evolve. But the bank has had a pretty cool story, just looking at the growth we've experienced. I mean, obviously 2008 is probably not the best year to start a bank. We went public in 2015. And when I joined the company in 2017, we had about 400 employees, and now we're over 1,000. So a lot of growth. It's been a lot, been really fun to be a part of.
Awesome. Yeah. And the campus is phenomenal. So if you guys are ever in Wilmington, go visit Dillon, whose campus. When I went there last summer, I was like, oh, this is our first building. And then we added this building, and then we added this building. Now we're adding this building. Now we're digging this over here. So it is a super awesome story, super, great bank to deal with. And especially for everybody listening, if you're looking to grow through acquisition, if you're looking to exit your business and the other person needs financing, or if you're looking to buy your first business. So how can just kind of walk us through the process of, how do you help contractors who either want to grow their business or exit their business?
Yeah, great question. We've always taken an educational approach here at Live Oak. You don't know what you don't know. So really my goal and my main focus in my role at Live Oak is educating the industry on what options do you have if you're a contractor that you have 4 employees and a few trucks and you want to scale your business to 2 to 3 million bucks in revenue. So, that requires, hiring, investing in your business, additional overhead. And that can be really hard to do that by, funding it yourself and bootstrapping it. There's really good loan programs through the SBA where you have access to capital, such as working capital loan programs where you can, invest in your business for organic growth. But there's also ways, if you're, 4-man company and you have a local competitor that wants to sell their business, you don't have cash to buy them out. They don't want to sell or finance it to you. That leaves a gap. But there's actually a really good loan program, again, through Live Oak and the SBA loan program, where you can potentially receive up to 100% financing to buy out that local competitor. So, I think of how we help contractors. It's in two different buckets. You have the growth side, and then you have the transition side. So on the growth side, I think organic and through acquisition. We discussed a little bit of the organic, like investment in field management software, um, personnel training, hiring, equipment, vehicles, stuff like that, through working capital. And then, via acquisition, where you can go out and buy local competitors. And then also we have commercial real estate products. So if you're, a growing company and you're running out of space at your current building, you'd like to buy a larger building for your business to operate out of, a great loan product for that. And then we can also look at like debt refinancing to help free up cash flow as well. But then on the transition side, and this is the side that I get most excited about, because folks don't know their options when they're going to sell a business. They haven't started a succession planning strategy. They've heard about what their friends have done. And they think that's the only avenue if they want to sell their business. So, a lot of what I do throughout the year is educate business owners on their exit options. Through the Live Oak and the SBA program, we actually have a great loan option. If I'm running my company, say whether it's $1 million company, $10 million company, and I want to sell to a key employee, whether that's, the service manager, office manager, general manager, or maybe a family member, maybe son, daughter, and, kind of going back to, I don't want to sell or finance the transaction. GM, son, daughter, they don't have cash to buy me out. So that leaves a gap. And we're able to utilize a loan program that's beneficial in terms of loan terms and down payment options to help get those deals across the finish line. And, what that does is it preserves the legacy and the name of that business. A lot of business owners would love to sell internally, but they just didn't know that had been an option previously.
Awesome. That's all. I mean, there's so many different options there, and probably a lot that people didn't know about, even just, debt refinancing. If people took on debt when interest rates are high and now they keep trending lower, looking to refinance to increase cash flow to then go scale your business by leveraging that, or 100% financing. So is the 100% financing, that's, I assume, based on the story you told, that's if you stay in the same industry. Is that how that works?
Yeah, so it's called the SBA expansion loan. And you do have the ability to get up to 100% financing, but you have to buy a business in the same NAICS code, NAICS code, which means you're pretty much going to be selling the same product services. So HVAC and plumbing have the same NAICS code. Electrical, for some reason, has a different NAICS code, so that we kind of have to work through that. But if I'm a heat and air company, I've been in business for at least 12 months. And I want to go buy a local competitor, you can apply for that SBA expansion loan through Live Oak Bank and receive up to potentially $5 million without having to put any cash into the deal. And how we do that is we just add your existing business as a co-borrower on the loan to utilize the equity out of that business to potentially alleviate the need for a down payment.
Awesome. And I know there are some SBA limits. I mean, you mentioned call it $5 million for that particular expansion product. But I know, like, if someone's going to go buy, call it their first business,
Mhm.
What are the kind of SBA limits on, how much they'll lend percentage wise, dollar amount wise? What does that look like?
Yeah, great question. So if you want to go out and purchase your first business, SBA requires a 10% equity injection. And we do as well for first time buyers. So, to keep math simple, if you want to go buy $1 million business and assume that $1 million includes, closing costs and all that good stuff. 10% of that is 100K. So, Paul, if you're running a business, you want to sell to me, I'm a first time buyer. I apply for an SBA loan through Live Oak Bank. I come to the closing table with 100K. Live Oak Bank lends 900K, which is 90% of the transaction. And Paul, you get to exit the business with 100% of the sale proceeds. The SBA recently, I guess, not too recent, but end of last year, they made some changes to their small dollar loan program, which has been really beneficial to the industry. They essentially made it a lot easier for banks and SBA lenders to make loans 500K and below. Most SBA lenders, including ourselves, had loan minimums of about 150K prior to those rule changes. But now we have the ability to finance an SBA loan at $10,000, which we haven't been able to do that last 15 years or so. So really great changes that the SBA made last year to make it easier and more accessible for small business owners to get capital.
Yeah, that's awesome. I mean, and I know a lot of times business owners don't even think about going to the SBA for something like that. It's like, oh, can I go to the line of credit at my bank? Or can I go find a credit card that's 0% for 12 months or other ways to get creative and not even knowing that the SBA has this program. So that's super helpful as well. Looking at it on someone that wants to sell their business, obviously you're mainly helping, call it the buyers. They see a business they want to buy, they got to go get funding. So you're looking at a lot of businesses, your underwriters are looking at a lot of businesses. What are some of the key things you see that stand out? Obviously, you're not diving in as much as the underwriters, but what are some of the key things you see that stand out just immediately when you're looking at a company of like, oh, that business probably isn't going to qualify for SBA because XYZ? And then on the flip side, what are some great things you see about businesses that are like, oh, that's a slam dunk. SBA will lend on that, no problem.
Yeah, really, really good question. And just to clarify, when we're making a loan, Live Oak is a preferred lender through the SBA. So when you're applying for one of these loans, you don't work with the SBA at all. You work directly with Live Oak. We get to approve and disperse our loan funds in-house. So while it is an SBA loan, you're only working with the bank. You never work directly with the SBA. Which has its advantages. We're able to turn around these loans quicker and get you feedback in real time and expedite the closing process. But going back to your question, some key things we look at in deals. We're a cash flow based lender, so we lend on debt service coverage. And from a high level perspective, we want to make sure that the business we're lending to produces enough free cash flow to service the debt payments. So we're not like a traditional bank where they're lending on collateral and loan to value. We're more so concerned with the ability for the business to service its debt obligations. So with that, we look at, a few key things like revenue trends, cost of goods sold and gross profit trends. We look at, what's your overhead. Then we look at the bottom line net income, and then, kind of take a look at, what add backs to this business has. And add backs can be kind of subjective. Typical ones are interest expense, depreciation expense, amortization expense. If you're buying a business, we would add back, the salary that the owner paid themselves because that expense is going to be non-reoccurring once you assume the business because they will be exiting that company. Maybe their life insurance premiums or their retirement contributions or the vacation they took to Mexico every year that they write off through the business. We look at all the add backs. We also look at the work mix of these businesses. We really like the service, repair, and add-on replacement or retrofit side of the industry, whether that's residential or commercial. We typically want to stay away from companies that have a lot of exposure to new construction installation or new construction or project-based work where, they're simply installing units on ground up projects. And we kind of have a threshold for that. It's probably going to be 30% or less of total revenue is what we can get comfortable with. Um, so we look at that. We look at customer concentration risk. We want to make sure, all your eggs aren't in one basket. So, the typical threshold we have for that is we really don't want to see more than 20% of revenue coming from one single source. We want to make sure that your revenue is spread out. We look at accounts receivable, accounts payable reports. We want to make sure you're getting paid by your customers on time. We want to make sure you're paying your vendors and suppliers on time. So we take a pretty deep dive, into these businesses. And I think the advantage that we have is we focus on this industry. So we really know what these financials look like. We know what the benchmark should look like. We know how these businesses are compared to their peers. So we can kind of sift through these things a lot quicker than banks that don't focus on that industry would.
Yeah, and I think that's a huge advantage. I mean, even for the obviously the people using Live Oak Bank, because if I go to my local bank down the street in town and talk to them about trade company, they're looking at hundreds of different types of companies. They're looking at restaurants.
Yeah.
They're looking at everything. Whereas you guys, all you're focusing on, especially your team, is just the trades. Now, Live Oak Bank does a lot of other industries, but you specifically, you're an expert in the trades. So that is a huge value add for for everybody that's working with you guys. A couple things that you mentioned that I want to kind of dig into a little bit. One of the things where you have the ability to kind of expedite the process. I know, when you talk to a lot of people about SBA, the first thing they think of is like, oh, that takes forever. It's just months and months and months. But not everybody's like that, right? There's some banks that are, I don't know what the names are, and you can give us an insight, but some banks have the ability to make the decision because they've proven to the SBA that they know what they're doing. Is that right?
Yep. Yeah. I talk to people all the time about SBA, and maybe they took one out 10 years ago and they have a lot of heartburn from that experience, or that their buddy took one out and they didn't have such a good experience. They heard about it, but the SBA is a fantastic loan program. And kind of diving into the different designations. So we're a PLP lender, which stands for a preferred lender with the SBA, and there's many other preferred lenders with the SBA as well. It's not like we're the only one. And then there's GP lenders, so general processing lenders. And the difference is, Paul, you apply for a loan with us, we're going to give you an SBA loan. You send me your financials, I pull your credit. I look at everything myself and say, hey, Paul, I want to move this into underwriting. Um, you know, we underwrite it in-house, then we get it approved in-house. That's how every PLP lender can do it. If you're looking at a GP lender, then they collect all your information. They give it a sniff test, make sure it looks good, then they package it up, send it off to the SBA, wait for their decision. And sometimes that can take up to 90 days. And as you know, in these transactions, timing and speed is everything. Time can kill all deals. So we believe in moving as quickly as we can, just because, when an individual is selling their business, they want their money yesterday. That's really all they're concerned with is, when can I get the check? So we understand that. But if you are a business owner looking for financing through the SBA loan program, whether it's Live Oak Bank, another lender, I would highly encourage you work with a preferred lender. And with us, being the number one SBA lender in the country year over year through the 7A program since 2017, we've been able to maintain that preferred lender status.
That's awesome. And that's super helpful to know because most of the time people think of SBA as exactly what you mentioned that the GP did. They send it out to the SBA and wait and hope that everything got there. And then 90 days later they get a decision or they get, hey, we need something else. And then it just keeps, kicking the can down the road. One of the other things when you're talking about add backs, an owner's salary, curious to how you guys look at it if the owner is still working in the business. Say they're the general manager or there's the service manager, like they're still actively in the day to day doing some sort of role. How do you factor in how much, if any, or all of the add back is going to be for that owner's salary?
It's a great question. So kind of how we think about it is, if you're an existing owner acquiring another business, if that owner is, somewhat in the day to day, can you absorb those roles and responsibilities to where you wouldn't have to hire on an additional person? If so, then we add back that full owner salary. into the net income to determine the free cash flow. But, say for example, it's a smaller company where that owner is wearing many hats, and, the buyer might not have the time or resources to do everything that seller was doing in the selling business, the owner of that selling business. So say for example, that individual is paying themselves 50K, but you can replace them or say they're paying themselves 100K and you can replace them for 50K, then we would just have a 50K add back. So every deal's different. And that's what's so fun about my job is, we see many different types of scenarios and, get to put on our thinking caps every day. But it's very, very situational on, what we consider the add backs to be.
Yeah, and I think that's another value add of having somebody like yourself and your team that are experts in those industries, so you can actually rationalize even to underwriting of like, hey, this is how they do it. Versus if you go to your local bank down the street, they'll be like, no, we can't do that because we don't know enough about it. So we got to be a little bit more conservative. So that's super helpful to know because I know a lot of people are in that situation. Even a lot of clients I work with are like, well, when we look to sell this, how much could we add back out of my salary and all that kind of stuff. So as we start to wrap up, if there is somebody listening to this thinking, man, this sounds like something that I might want to take advantage of someday. When is the best time to engage with a bank if they are interested in financing, whether buying their first business, growing through acquisition? When should they reach out? Because I've heard stories of like they go through the LOI and they start doing all the things and they get the purchase agreement and then they wait and it's too long,
Yeah.
and then vice versa. They do it too soon. The bank's like, no, 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 wait. Like, what is the best time to engage with the bank to start that conversation if anybody is ever interested in leveraging financing to grow their business?
I think reach out as early as you can. Again, I said this at the beginning. You don't know what you don't know. So say, for example, I'm a business owner that wants to sell my business, and I want to sell tomorrow, but my cost of goods sold is too high. My gross profit's too low. My financials are a mess. They really need Paul's services, and you can't change that stuff overnight. It takes time to implement those changes and for those changes to reflect in the financials. So I talk to business owners that, say they want to exit their business like 5 years in advance and say, hey, if you want to sell your business and, make sure it's attractable for a bank to finance, this is what we look for. Make sure you're focusing on service repair, add-on replacement, build out your maintenance agreement program, make sure your financials are clean, stop taking cash jobs. The list goes on and on. And likewise, if you're looking to grow through acquisition, we evaluate your existing business to make sure that you're first running your own business successfully, because if you're not running your own business successfully, the chances are you can acquire another business and make that successful is very low. And then on the personal side, if you're a first time buyer looking to get into the industry, you need to start thinking about licensing requirements because they're different state to state and city to city. You need to make sure your personal credit's looking good. It's so funny. I guess it's not funny, but when I'm looking at personal credit for a lot of folks, they thought they had a 780 and it's really a 650. And they're like, well, I've made all my payments on time. I don't know why it could be so low. And I said, well, there's this $20 outstanding delinquency to some cable or internet company where you forgot to turn in your router or something got messed up with the bill and it has negatively affected their credit. So then, as I'm sure everybody will know on the call, it takes a while to rebuild your personal credit. So, there's things that you have to do and prepare for, months, years in advance to position yourself for, growth or transition.
Love it. Dillon Caraway, thank you so much for coming on the show, sharing your journey, and providing a ton of insight, wisdom, actionable advice for all the blue collar business owners out there as we continue our journey to prosperity. Before we sign off, though, Dillon, where can listeners go to reach out to you, keep in touch with you, to learn more about how you can help them, either exit or grow their business?
Yeah, whatever is most preferable for that individual. I prefer cell phone. You can always reach me on my cell at 252-671-2427. Call, text is perfectly fine with me. If you prefer email, you can reach me at dillon.caraway@liveoak.bank, which I think we'll post at the end of this as well. And then also I'm active on LinkedIn. You can shoot me a message there. So whatever your preferred method of communication, definitely feel free to reach out.
There you guys have it. Reach out to Dillon. I don't even know how busy that cell phone is because he gives that number out to everybody. So we'll put that in the show notes. So if you do want to text or call Dillon, you want to email him, it'll be in the show notes. So you can reach out to him that way, no matter how you're listening to this. Dillon, thanks again for coming on the show today. Really appreciate it.
Paul, appreciate it, man. It's been a blast.
And before we go, as you know, there are a lot of moving parts when it comes to creating consistent positive cash flow. However, the journey starts with making sure you are priced right so you can have a growing and more profitable business. I've created a super easy to use pricing calculator for everyone in the trades. You will no longer have to guess what you should charge. You'll no longer have to call around your competition and see what they charge. This calculator is easy to use and will provide you confidence and clarity that you're actually priced right. It also comes with a step-by-step PDF guide and a video walkthrough. So head on over to thebluecollaradvisors.com/price. thebluecollaradvisors.com/price to download it today, and so you can start implementing it tomorrow. Until next time, remember, what got you here won't get you there. If you are ready for different results, it's time to start doing things differently.